Hello everyone, good morning and welcome to True Potential's Morning Markets. In today's video, we would like to look at the falls that we've seen within oil prices and what that means for consumers. Since the end of September, we've seen global oil prices fall by roughly 20%, and that takes them below their one-year average price. So for WTI, that's currently at about $70 per barrel, and for crude oil is roughly about $75 per barrel. Now, why is that? Well, there's two reasons. Oil is a supply and demand market. So if we think about the demand side of things first, we know that demand for oil is slowing. We're seeing global GDP slow from above trend back towards those trend levels. And also within that, one of the larger importers of oil, which is China, we know the struggles that their economy is having at the moment. So we're seeing weaker demand for oil. On the supply side, however, we're seeing increased supply, and that's mainly coming from the US. We know by looking at the oil rig count that number is slowly ticking higher, but the amount of shale oil that those rigs are producing is now back above the pre-COVID level. So we're seeing higher supply come through from the US. Now, we said, what does this mean for consumers? Well, ultimately, this lower oil price should start to come through in terms of lower fuel prices and lower petrol prices when people are going to the pumps. And ultimately, what that means in terms of the economics is that that should have a downward force or pressure on inflation. So we should start to see that come through in terms of lower headline inflation prices across the globe. Now, once again, why is that important for financial markets? Well, next week, we've got three of the major central banks with their latest monetary policy update. That is the US Federal Reserve, the UK Bank of England, and the European Central Bank. What that has allowed market participants to do is start to look at future interest rates. So for those meetings, markets aren't actually expecting any change. However, when we look into 2024, we start to see markets become more comfortable pricing in lower interest rates from these central banks because of this falling level of inflation. Thank you for watching today's video, and we'll catch you on Monday's video.